Greetings, everybody. This is Jeff Scott, and welcome to this week's video. I had not planned on doing one, but I've got about a half hour of waiting here in the hotel room, so I thought I'd try and whip something out. I'm not sure when it'll get online. It'll be sometime today. It is Sunday the 23rd, right around noon. I titled today Triple Tops because to me that's the dominant theory for this week. Disclaimer, this education purposes only. I'm a doctor, not a broker. I'm independent, and trading involves risk. You and your loan are solely responsible for any investment decisions you make. I title my trading and my education, Be Your Own Guru. I've learned from some smart people around this page, and then I took it, added it together, added my own special sauce, and that's my style. I use a lot of different programs. I need TradeStation and Thinkorswim because of the multitude of indicators I've used. Hgsi and EdgeRater for my post-market analytics. I use Q tools, a couple of different websites, but it's really, if I have TradeStation, Thinkorswim, and Hgsi, I can probably get by. Speaking of Hgsi, I have no relationship financially with the company. You'll notice that I have some additional indicators that you do not have. I actually paid substantial sums to have those added into the program, and I am looking at some point to launch a add-on that will have a fee attached to it to pay off that cost. I make plenty of money in my trading and in my day job that I don't do this to make money off of other people, but I do like to defer costs when I can. So more about that to follow. There's a free 30-day trial to Hgsi right up here, and down here under investing strategies, you see videos from Ron Brown and I numbering in the hundreds, if not more. You know, we live, again, in a cyclicality pattern where we get up near the top and it feels like we're rolling over and then we go to another leg higher. We're in that leg higher right now, so we're probably over where my arrow is. And the question is, how much higher do we go? And is this triple top going to be a top, or are we going to push through it and let that turn into future support? Because there is some uncertainty, I do have some cash. I have less positions, although I got some substantial positions, and I've been selling some premium against my longer term positions. That said, if this market takes another leg up, I'll quickly reverse that and get much more aggressive. As I said last week in the video, I am clearly long. I have very little protection on except selling some premium against current positions. Sector review on Friday doesn't look great. Clearly, you look at industrials and technology and you see a sea of red. There are areas of strength. I mean, healthcare is starting to move, where real estate, a dividend payer, is not. So falling rates, typically are good for dividend payers, but last week there was some divergence, which I'm going to show you. Financials still fairly weak, but a little bit of green popping up. Major markets tell a story. I think everybody knows we're near highs on all the major indexes. You could see we had an intraday high on the E-minis on Friday. It did come down from the top. We are not at the high on the NASDAQ. We did have an intraday high on the Dow on Friday. This is an all-time high. The Russell is down here, not near the high even on this picture. The VIX actually had a buy signal on Friday, which suggests perhaps some weakness coming. And the dollar has sold off sharply, which has led to a change on the metals. When I look at the weekly chart, you can see the strength across the three major indexes on the top, the E-minis, the NASDAQ futures, and the Dow futures. The Russell in an uptrend, but lagging, and you can see the VIX really is down near its base, or the higher base, and the dollar weak, as I mentioned. Rates started to diverge, and what do I mean by that? If I was to spread this out, you'd see that the short term, the 2 years here, 10 years rather, pulled back, dropped a tad. They were pretty flat, actually. But the 30 years, actually turned up. And if I look down here, and you have to squint to see this light blue line, I can't change the color, I've tried. It is turned up on the 210 spread. So if the yield curve is becoming less flat, that might be a positive sign and less suggestion that there is an imminent recession. The AD lines have been strong. Both now the small stocks are at new highs or approaching new highs, while the large stock AD lines in white are at new highs. If I look at the NYSE, you could see essentially at new highs. The major indexes have turned up, and with the dollar falling, and yields starting to be interesting. The bonds actually gave up something, that's the TLT. Breadth, this line here has been a line where I've seen reversals in the market. So when the stocks above the 200-day SMA start to get above this line, I get concerned. We are approaching the line. We're not there. So strong, but not overbought. Similar on the stocks above the 40. And when I look at the stocks on the 3-month new high, new low, it's been whipping around, but it's in the center. So clearly we have more overbought than we were a week ago on every parameter, but we are not at a point where there's an extreme where one would expect a reversal. The daily McClellan, the summation indexes and oscillators are not demonstrating any divergence at this time. They're certainly not at extremes, so I don't see a big signal there. On the buckets, 2/3 of the stock, or 3/4 of the stocks rather, are above the midline of their Bollinger Bands. That is bullish and not an extreme. And the number of stocks above their higher band is not an extreme. So again, not a signal of an overt need for a reversal here. There should not be a Hindenburg's with this market run-up, and there is not, but I'm going to look at them because you may see, as a sign of topping in this market, the Hindenburg start to come out. Market tone, as you can see here, clearly bullish. All indexes are green. In fact, if I look at the sector strength, it's as strong as it's been. And it's not just one day. So the market strength is definitely turned up. Canaries in the coal mine, the big stocks that once led, they're struggling to get above resistance. They probably are not nearly as important as a group anymore. Tesla's been beaten up. Apple, Amazon, Netflix is starting another run, and Facebook are doing well, but some of the others are struggling. This is an index of leaders that I put together in March, and it's interesting with all the changes in the market. They've done nothing good or bad, but even with the volatility in the market, they continue to be right under their all-time highs. But as you can see, they've been basically basing for a long time, and I thought they were breaking out Thursday, and they gave some of that back on Friday. This is an early warning signal. It is a group of stocks that were leaders, and if they turn over, I would know the market was going through a change. I may need to put another leaders index together because these are no longer the leaders, although they've done well. Know your news and earnings. Obviously, last week with the Fed report was a big week, and next week, not this coming week, with a monthly unemployment report for July will be a big week. This is an in-between week. We got durable goods, international trade, personal income, new home sales, and petroleum. We also have a number of Fed speakers. We've got Bostic and Bullard on Tuesday. So I would put this in a medium news week. We do have a GDP. That'll be interesting. Now, earnings are interesting because some of these are big. FedEx might give us a clue of what's going on related to the China issues and how much are they losing because FedEx has lost some of the short-term and intermediate-term contracts with Amazon. We'll hear from Lennar and other home builders and get a sense of what that industry is doing. Some solar stocks, Jinko Solar, Rana Solar, and others. And then Accenture and a couple of other big companies. So I think this is going to be an interesting earnings week, but not a giant earnings week. And I think down here is important to remember it's a judgment call to hold stocks over earnings dates, and it's bad judgment to not know when your stock's earnings date is scheduled. That is a personal quote from experience. And here's the reference for the news. It's free and on the web. So, thoughts. Market finished slightly lower on a quadruple witching expiration Friday as it cooled from a big stretch of gains. The S&P 500 declined a small amount, but did set a new intraday high and finished the week higher by 2.2%. The Dow and the NASDAQ trimmed their gains, but still had very strong weeks, while the Russell underperformed on Friday, but still finished close to 2%. Dollar weakness led to a rally to multi-year highs in gold and silver, while rising tensions in the Mideast and a refinery fire in Philadelphia impacted oil and energy prices. Fed signaled a change in stance to more easing, while central bankers across the world seem to be taking a more active and loosening role. Yet, U.S. markets continue near all-time highs. Economy continues to perform, but there was some data that I saw of some wage pressure. Maybe we will have inflation again in our lifetime. My feeling is we're once again at a key sign of resistance on the S&P 500, a triple top. We hit this area now in a time of strength, but with continued China and Iran news, that can lead to a sell-off. I think this is still a time for caution and keeping cash on sidelines to use when we clearly break out from this area. When I did my bottoms-up review and looked at close to 1,000 stocks this weekend, I was impressed by the number of stocks that had short-term sell signals coming in near highs. And I think this is just a sign of the confusion in the market. Now, clearly, the G20, which I believe is a week away, if we come out of that meeting, with some tweets that are positive about China, the market will probably break out from here. And at the same time, I think a failure to have any positivity will cause the markets to revisit. Here's our typical top-down agenda. Now let's go off to the charts. So I've mentioned that it was a strong week, so let me just pull this up. I monitor a number of watch lists on every week, including my own stocks, the S&P 500, and notice it's really all black. There's a couple of groups that were red, so I have 35 groups here. I have 1, 2, 3, 4 groups that were negative. Interesting, some of them were good momentum stocks a week ago. Gallardi Sprinters was flat, and Pocket Pivot Original Group, you could see that was down a bit as well. Now, what I want to point out here is that the S&P 500 was up 2.2%. That's a very strong week. Within IBD now, or MarketSmith, they have this thing called the RS line blue dot scan. I've been using that and making money on it, 2.38% on the week. Got to be happy my holdings were up 4.27, 30 to 5 winners to losers. That's an unusually good week. A sign of how strong a week it was and why a lot of these were candidates that were probably oversold short term is the stocks that were shorting candidates. Again, I get a list of shorting candidates just to get a sense, because they seem to reverse on a lot if a market's reversing. They were up close to 6%. The buy watch I came up with was a laggard 1.68. I do a thing called filter buys, and that was a little bit better at 2.2. There's no way not to say that this wasn't a very strong week, and we'll see if it continues. Here's the S&P 500 on an here it is on an Hgsi chart. Eventually, you're going to see it, and I just extended the box that I put in here when we had the double top, and it's not exact. I guess here's the I can't tell now. I mean, that's about where the triple top is, so we may be actually above it a tad, but regardless, we are within the top of the box. This is a place where reversal is more likely to occur. And a break above the top of that box would be extremely bullish. But I think until that happens, I'm going to be a little bit concerned that we're at a place of resistance. Down here, just for point of reference, this green thing is a Eureka. And a Eureka is the HGSI equivalent of the William O'Neill follow-through day. And it's calculated by math, and it fired as this market reversed off of a V bottom. So a V bottom followed by a V bottom, approaching and at new highs, certainly broke above it, although not a new closing high. This is a kahuna, and this here is my personal buy indicator. And you could see all of these firing with the market reversing. And now you're getting to a point where you're not seeing the signals. So I do think there's concern here, but I'll let the market dictate how I do, not just what I think it's going to do on Sunday before the market opens. Now, I do like to look at some signals in TradeStation, and this incorporates some Elder and Person and my own stuff. So if we look at the E-minis, for example, and I have like a 6-point score. Number one, they're all in a buy signal, daily, weekly, and monthly. That's pretty good. I look at the color of the paint bar, and when I start to see green turn to blue, it's still okay to be long, probably not ready to be short yet, maybe thinking about it, but it's telling me momentum is starting to slow down. Now I've got green bars on the weekly and monthly, so in the longer term, we're okay. Notice this red dot here. That red dot here says that there's probably some MACD divergence forming, and that could be something setting up. But I'll tell you that it has a tendency to fire multiple times before the market rolls over, so I don't change because of that. I look at where am I on the upper envelope, and I know that it can track up the upper envelope, but we're kind of in that area now. I look down here, my weekly bond goes green, and then I get a little bit nervous. The reason I'm getting nervous is because my high jump is at 97.15. That's an adaptation of what Ian put together. I actually take the highest value. I set that as 100, going back X, in this case is 200 days, and we're at 97% of the highest value. Why is it important? Because on this day here, that was only 91. It was 97 the day before, and the market reversed, 96, 97. So we're at a area where this market is stretched and at risk of a reversal. It could also ease off the pressure by going sideways. If I look at the NASDAQ futures, really looks the same. They're at 91%, not nearly as bad. And look, there's a thing called the, well, I won't go there now, the low jump bar. The Dow futures are at 94%. If you followed me long enough, you know how much credence I put on this. There is a limit to how far this is going to go. And when you start to be the most extended that you've been over a long period of time, that's usually about the time that you get a pullback or a sideways move. The dollar, and it works in the dollar as well, back in, for example, with that peak there, I guess it's not going to, you can get extension on the high jump on the dollar as well. We're not there right now. In fact, the dollar's in a sell signal on the daily, weekly, and monthly. Notice the green dot here. This is analogous to the red dots up here, and this is a bullish MACD divergence on the short period of time. So the dollar's weak, but maybe it's going to stop falling soon. If I go back now and I look at the major indexes in Hgsi, we looked at the S&P 500. I'm not sure we have a lot to look at here because they're all very similar. Here's the Dow. You can go back here and find that your triple top is right here. So you're right below the double, at least double or triple top on the Dow. If I look at the NASDAQ futures, the NASDAQ has not set a new high yet, but you are still in the box that was forming back here. And this would be kind of where that resistance is going to come in. So we're very close on the NASDAQ. And if I look at the Russell 2000, at least the ETF for it, we can see that it's a laggard and is struggling now just to stay above its 50-day moving average, but it has had a big move. The dollar we talked about has weakened, and you could see it right here. It's pulled back, dropped below the 50. The 200 would be a natural bounce point looking to the left. This has been where the dollar has reversed in the past, and just for grins, I could come down here and put some type of a trend line on this and say that we've dropped below that trend line, and that's including 1, 2, 3 data points. So it'll be interesting to see if we can't jump back above that. But a failure to do that, we will probably come down and touch the 200-day moving average in red. Volatility, as I mentioned, had a positive signal this week here, but it's down low, so it's not giving us a signal that's actionable perhaps at this point. Gold has broken out, Bible gap, well, not a Bible gap up per se, but a big gap up on Thursday and Friday with the dollar weakness. Silver, a similar move, but from a lower starting point, and you could see here, big move this week as well. So, and then oil, I mentioned, there was a couple of tankers that blew up or were on fire, some question about stress with Iran, threats of retaliation when they shot down a drone, and you could see oil had a big jump as well over the last couple of days. So I think what's going to dictate more than anything else this week is what the market does. Big shocker. Everybody knows I'm a top-down guy. It's always that way. If I start looking at where the interesting things are in the market, I look at the industry groups. I go 2-day force, and I see a small number here. And so I'll look at a couple of them and show you some of my picks, and then I'm going to make this a short one. I could tell you everything I know and what I think, but I think what really matters is what is the market going to do and the triple top. And that's probably the most important thing this week. Here's a small biotech, Melinta Therapeutics. I don't know anything about them. I think they do antibiotics. It's not the picture I want, but it's a pretty picture. Obviously, well, you can't see it there, so I'm not going to say the word obviously. How do I want to fix that? I want to, here, edit, view, give some extra periods on the chart. Had a pop over at the end of the week, ran up. I don't usually chase things like this. 3 million shares on Friday, average volume 2.4. On Thursday on the pop, 19 million. On Wednesday, 85 million shares. Something is going on here. I don't know anything about this company. The bullish argument would be it has a weekly buy signal and showing some momentum. I can't really give you much about this company. It's a preclinical company, so you might be interested in looking at the news about it. Amgen, this is a big biotech, below its 200-day moving average, certainly moving up. Not enough, I like to buy things that are breaking out to new highs or recent highs and not stocks that are below the 200-day. Alexion does look more interesting. It is a pullback, breaking above the 50-day moving average. We have a pocket pivot and we have a kahuna. Everything is green here. They've got competition coming from their historic key product for P&H, but they've got a pipeline that's growing, and that's an interesting play. Does not pay a dividend. I could not argue against nibbling on that one. Biogen kind of deep in its pattern. I'd like to see it move out of there before I get excited. Array is a takeout. We were in that one. I gave you this one back here in January. There was another obvious buy point in May, and it got taken out after ASCO, after they had some positive data in colon cancer. Gilead, another one that's showing some interesting move here, breaking above its 200-day moving average. You can see the group strength. Typically, if the economy is going to start to slow down, if there are concerns, healthcare is one that outperforms. It pays a good-sized dividend. The problem is their revenue and their earnings growth are tepid. They have to replace some major products, so stay away from it. Insight is potentially an acquisition candidate. They have a drug on the market that's a blockbuster. They've just had some label extensions, and you could see breaking out to a recent high here, going back until April. Probably even bigger than those, about the highs of earlier this year. Clearly a very bullish move. The time to have obviously bought it was the break above the 50 with the pocket pivot and the kahuna, the mobile breakout from the squeeze. Probably not too late. It's not a cheap stock as far as market cap, which is about 20 billion, but it's one of those mid-tier biotechs that would be attractive in October. This one has already taken over Celgene. Regeneron struggles in their pipeline, and their chart reflects it. And Vertex makes a number of drugs for cystic fibrosis. I like the pattern of breaking here above the moving averages with lots of blue down here, and new weekly bond go green. It's got some earnings, perhaps not enough growth for my taste. And here's one that I'd probably be the most interested in healthcare today. This is in biotech, right? This is Epizyme, EPZM. They have a drug that surprised at ASCO, the big cancer meetings at the beginning of June, with some positive data for sarcoma. And this past week, they filed for an approval. Typically, drugs before approval companies have a less than $2 billion market cap. It's got 1.3. If this drug got approved, the market cap is probably 4 to 5 billion and gets taken out in that range. So I'm going to put some of my Array profits, well, I already have, but I'm just telling you, into Epizyme. I'm interested in that one. It's tough. Now here's one where I made a mistake. I owned a piece of this. It had the Bible gap up and came back on the same day. I actually took profits the next day because the news that drove this was very early stage, and it continues to go up. This is Aracul. So there's some interesting stuff in biotech. Like I said, the one that Epizyme looks very interesting to me, and Insight. Second group down are oil exploration. Again, we talked about why with the challenges in Iran. You're not going to see great looking charts here. You've got Diamondback that every time it runs up here, it gets beaten down. Is it different this time? Your weekly bond goes green. You've got above the 200. You had pocket pivots in the kahunas and a bullish reversal on the daily charts. I like this. I am suspect on this group. It does have earnings per share growth. EOG, too far down in its pattern. Concho's too far down. Pioneer. So far, the bunch, I like Fang, Diamondback the best. Devon, I've made money on this drug in the past and usually buying it when it's down here. I like Diamondback because it at least looks like it might be working out. Noble, let's see if there's anything here that really... Yeah, I think the one that I liked the best was the first one that we saw, which was Diamondback. And then one that also I thought looked interesting just because it's sort of at a point where it looks like it's done going down is Oasis. And what turned me on there was the squeeze, multiple kahunas, and a buy signal here on the weekly. And this is sort of a special thing, looking at relative strength versus the S&P and looking at its moving average and the fact that we're breaking above the moving average, which for me is usually a buy signal. So that is the energy. Midstreams, these got a boost because of the fire in Philadelphia. I like Kinder Morgan. This is probably the big one. 4% dividend yield breaking out here. I think not too late to buy it, but remember this pop may have been news driven. 1OK, Williams, they all are about the same pattern. ET, they had ownership of the one multiplex. They all play different dividends. I really think the best one is Kinder Morgan. Specialty apparel stores. You can see a sea of red on the fundamentals. So these are stocks that are moving up off the bottom. L Brands. These are not what I buy. Children's Place. I buy growth. I buy breakouts. Burlington has been one in the past. Its earnings per share growth is tepid. Foot Locker. So I don't see any I like yet in this group. Why do they make it to the list? Because they have good volume. They've been up the last couple of days. Boot Barn's interesting. It had a huge run last year or earlier this year, breaking out to all-time highs. It's got earnings per share growth greater than its multiple, and it's under demand. Boot Barn, probably would never shop there, but it might be an interesting stock. Managed care, revisiting. I bought United Healthcare a while ago, took profits. Time to be buying them again. I like stocks that are basing, kind of a loose base here, but pocket pivot, kahuna, out of a squeeze, weekly bond goes green. Humana looks very interesting to me here. It's got some earnings per share growth. United Healthcare, similar, running into the resistance already. That might be concerning. Break above that would be interesting. I also own Centene, which had a pocket pivot as well. So managed care might be interesting. Healthcare services, do you notice a theme here? Healthcare is defensive. So as you're getting to a point where risk is higher, perhaps it's not a surprise that healthcare is holding up some. I compete against IQVIA from a healthcare data perspective, but they're breaking out to all-time highs. It's expensive stock looking at their growth. Laboratory Corp of America, sort of sideways. Now, one of my colleagues, I was showing him the patterns I like. Well, here's a base. There's a pocket pivot, a kahuna out of a squeeze, so that's a compelling story. I don't like the growth, and I'm not, to me, it's a commodity business. Teladoc, Amadeus. I'm just seeing if anything looks like it's actionable. MedPace, don't know anything about this. I did like that it went sideways here since February. Couple kahunas. This was the time to have bought it back here out of the squeeze, but it's still at a point that is interesting. Earnings per share growth is kind of mediocre. So I typically will go through the top 10 groups. Refiners were up because of the fire. A lot of them are pretty ugly patterns with big dividends. Here's one. PBF Energy had a gap up on Friday with a kahuna pays 4.2%. Marathon Petroleum, Gap Up, pays 3.8%. They're all going to be the same pattern, all low in their pattern, but perhaps with the summer driving, gas prices will go up and refiners will make more money, plus if there's any reduced supply related to the Philadelphia refinery. Apparel, footwear, take a look at a couple. Nike, it's above its moving averages. It's going higher. Okay, earnings per share growth, not my favorite place to be buying. PVH, no. Crocs, they had a big move on Friday with my indicator, Pocket Pivot, Kahuna. I don't like buying things that low in their pattern. I like things that are breaking out to new highs or going to make a run at new highs. I don't like things that are coming off the bottom. So Deckers is interesting. Notice the high jump ran up here and maxed, and it's gone sideways since. That looks interesting. I look at the fundamentals and I don't see it. I got 8,000 stocks I can buy from. I might as well buy stocks who I like the technicals and the fundies. Utilities, specialty farm, anything in there. So it's a time to buy Tilray. Tilray is a sort of a fund that was raised to be involved in the pot world. Pot stocks have obviously sold up. Off, you can see the run here on Tilray above 300. It's now down in the 50 range. At some point, I think pot makes sense, and this is probably going to be one of the larger companies if they can survive that far. It's got a market cap of $4 billion, $5 billion. At some point, it's going to be a buy. The weekly looks interesting. The couple of kahunas here get my attention. It might be worth putting a little bit of money in that and seeing what happens. Don't know anything about Global Blood Therapeutics, but I do like off the 50-day moving average. Can we have a mobile breakout from a squeeze and a couple of kahunas? Keep in mind that I expect there to be some Medicare for All discussions on the debates this week of the Democratic candidates. And they'll probably talk more aggressive than they really are, and that could cause some stuttering in healthcare. Progenics Pharmaceuticals, break above the 200, a couple of kahunas. Can we have a mobile breakout from a squeeze? A break above the moving average here. I think this also made it to my buy list. So typically I go through the top 10 lists there. I might look at how many of the, let's see, I'll go back here. So I had 19. I might look down on the down, and I had 48 home builders, REITs, airlines, restaurants, life insurance. What is common by these? REITs do well in a low interest rate. Home builders do well in a low interest rate. Perhaps the rising rates are going to pressure some of the ones that pay dividends that stand out in a low rate environment. We shall see. So I went through my list, and as always, I share with you the stocks that I'm going to be following this week. On my buy watch, I have a number of stocks, and they are from all kinds of analysis. I start here, if I look at the industry groups, biotech, which we spent some time, there's that Epizyme that I was interested in. Specialty pharma, that includes that Progenics. There's my Boot Barn. Oil and gas services, Endeavor Logistics, Oceaneering, Kinder Morgan made my list. And you can see there's some stocks beyond the ones that we looked at. What I do with this list, and it's in no order here. If I wanted to rank them by best companies, I might do it like this. But there really isn't an order here. I take this list, I stick it into into TradeStation, and then I watch it real time, looking for buy and sell signals. I use the various tools from Q, Hgsi, and John Person. I also play around with some of the tools from the art software company, and I might be looking for the trade confirmer and looking for stocks that are bullish and bearish that I may want to have some action on. On that note, I'm going to say goodbye, and I'm just going to end going back to this picture. I think that this market is in a critical period of time that I have to figure out what are the likely things that can occur here. So not to me, there's not that many choices. So let's build the box. In fact, let's take off all the stuff I put on there. Now let's build our box. I'm going to use a 200 as the bottom. That is our box. There are three things that I could expect from here. I could expect us to come down and at least retest the 200. I mean, that would certainly be possible, probably at some point, likely. I could see, and I'm not sure if I buy that that's going to happen. Hold on, let me do one thing here. I mean, we could see, and wouldn't that be nice, a breakout and we run on another bull run. Or we could see sort of an in-between where we work our way back and forth, either resulting in a breakout to new highs or a pullback here. And just like on the bottom, it could be something like this, and then a breakout to new lows. I think these are all possible. Right now we're in a trading range until we break above or below it. You buy the highs, you sell the highs or buy the lows. We're at the highs right now. I think that tells you what I expect to happen this week, barring some news. Now I just want to leave you with one picture. So let me close some of the things that are eating. This isn't bragging, this is responding to questions. People have asked how I've done this year. I started with about $1 million. Some money's come out, some money's come in. The part that matters is what is my gains for the year. I was up about 40 to 45%. The market pulled back. I'm up $420,000 on $1 million to start, so I'm up about 42% on the year. Not a bad year and not probably worthwhile stopping, although that's not what I do. The reason why I show you this is because some people think that since I don't show it all the time, I must be losing money. That's not the case. It's really no one's business how I do. But if I'm telling you what I think what's good and what's bad, it'd be nice to know that at least I make money in the stock market, which I do. I'll take 42% every year. But last year I got up at some point above 100, and that's my goal this year as well. Shut this down, and I'm going to open up something that may take a second, so I'm going to hit pause. All right, first, this is an E-mini chart. Let me see if I can make this bigger. And this is an E-mini chart. I'm taking this chart from my AbleSys program running in eSignal. And on AbleSys, blue is buy, red is sell, green is sort of a neutral. It's not what this is about. This was a run up in the 90s up until 2000 and a peak. We got up to 1575, and then by 2003 we got down in half to 775. So we split. No, we didn't split, we just fell down 50%. We ran back up. I would call that a double top among friends. Got up as high as 1587. And then in 2009, we got down to 653. That's a double top. And the question now is, well, let's take a look where we are now. So let's look at what happened. We did break above, but we hit the double top here in October of 2007. And we did not break above that double top until nearly 6 years. So double tops are not always our friends. So we did break above that double top. And here we are today. So when you look at what's being considered a triple top in here, and this is a monthly chart, I can take this down to weeklies. And that looks more like a triple top right there. They can take years to resolve. Yet, once you break above that double top, the market can make a giant move. So, what are we going to do here in this market? I don't know. I know that we are at a point where there's a lot of resistance up here. And we could get a fairly significant pullback. Now, what's interesting is I was doing these talks back in 2007. And I looked at that double top here. And then we got back over here in 2013. And there were a lot of people that said the market's triple top, it's going to roll over. And you could see that has turned into support, and we had a big move up. Let's look at the NASDAQ futures. Those that are old like me know that in the 90s and 2000s, the NASDAQ really outperformed. And then the NASDAQ fell from the 4,900 range all the way down to the 750. And that was between 2000 and 2002. And it took from 2002 all the way to 2017 to set new highs. This looks different, all right, than the S&P 500. Still looks very bullish to me on the long term. So I look at these things because I'm not willing to give up the bull yet. We'll see what the market thinks, and they don't have to do what I want either. So interesting markets. That's all I could say. But I have to respect, and I think you have to respect as well, that even though the markets have been great, it is probably not all in time sitting right here, that you want to wait and see, and ultimately you'd like to see it move up, retest, and then go to new highs. So we're there again. I think it's going to be an interesting week. It's certainly been a fun market for quite some time. All right, everybody, have a great week. Thank you, and thanks for putting up with my rambling. Bye, everybody.